Testing, testing, testing. Let me know if you guys can hear that now. Let me know if it sounds somewhat decent. You know, I might restart this stream here because I might restart this stream just to kind of get it going a little bit better. But let me know if that's working. And then what I'm going to do is I'm going to restart the whole stream. Good now. All right, we can just keep it going from here. I mean, it's just a live stream anyways. If anyone wants to go back, they can always kind of restart it. But what I started off talking about is I'm going to make a watch list for options as well as futures players. So I've got two charts on the screen here. We're looking at the 1 hour chart on the left. We're looking at the 5-minute chart on the right. I'm starting off looking at the NASDAQ 100. Reason being is because I trade a lot of high beta. I trade a lot of Tesla, Nvidia, Amazon, Meta, so forth and so forth. So I kind of like to see where the, where the macro cycle or the macro moves can potentially be. That way I can correlate that to the watch list that I'm going to be, looking for on those particular names on the option side of things. Now, for my futures trading, I do trade a lot of NQ. 98% of my futures trades are going to be on the NQ. And the only reason why I kind of favor the NQ a little bit more, there's a lot more volatility, means that there's a potential, downside for more risk because of the way that it moves so extreme, so fast. However, I've been trading NASDAQ stocks for the past 8.5 years. I'm just comfortable looking at the triple Qs. I'm comfortable looking at the NQ. It fits my style. It fits what I like, and it fits, what I know. So I'm not going to pull up the daily time frame. I don't really need to see too much. I can see the past 3 days worth of data here on my 1 hour time frame. So what I'm looking at here is I've got a couple of lows from Tuesday and Wednesday on the NQ. These lows that I'm looking at here, going back to Tuesday, going back to Wednesday, is correlating with this 200-day moving average on the 1 hour time frame. That time, or that price, is going to be 15,939. I can see the NASDAQ pulling into this area, consolidating either for a bounce or for a change in trend. Now, the bulls have been on a phenomenal move over the past month and a half from the bottom. Okay, it seems like a never-ending kind of short squeeze, right? And what that means is every sort of pullback that we've had intraday the last few weeks immediately is getting bought back up. So any shorts are getting continuously trapped to the downside, and the market continues to kind of scream higher. Now, for me personally, I would like to see some consolidation. I would like to see a continued back test for a better overall move to the upside. Again, the faster, the longer things go straight up, the harder they come down when they do pull back. So you want to see some healthy price action. You want to see some healthy pullbacks. But again, just keep it in mind, it doesn't have to pull back, right? We can go right now when the market opens today on Sunday and into the overnight session, we could pull back a little bit and continue to rip to the upside. So some of the levels that I will be looking for here going into the overnight session on the NASDAQ is going to be a loss of this little, 3-hour channel here. That price is going to be somewhere between this 996, right? 15,996 into 15,978. Now, we obviously know the market doesn't move a hell of a whole lot in the overnight session. So if you're able to grab 5, 10, 15 points to the downside on this little bit of a back test into rising support, which this rising support is the 150-day simple moving average on the 1 hour time frame, then take some profits and start your Monday on a good note. Now, if we do open below 15,979 on the NQ, what I'm going to be looking for is a preceding hourly candle after the market opens to confirm that new low below this demand zone and play that into 15,937. To the high side, I don't even want to look at anything until we start to get over 16,050. 16,054 is your 50 SMA here. I need us to close over that 16,054, and then I need to see a preceding candle kind of take that out. From there, I've got room to 16,083, and over that, we've got a lot more room to stretch to put in some more highs. 5-minute chart kind of showing a little bit of a bear flag here, starting to break down. We've got some Bollinger Band support sitting at around the 16,000. So let's quickly look at the ES and see what we've got going on on the ES side of things, kind of see where the support is at on the ES. We're going to be looking at the 1 hour time frame again. We're also going to be looking at this 5-minute time frame. So again, if there's any specific ticker symbols that you guys do want to see, just throw them in the chat and we can definitely look at them when we start to look at some of the stocks, right? I just want to look at the indexes first and kind of see what we're doing. Now the ES is kind of basing out a little bit more to the high side versus basing out on the bottom side like the NQ. We're holding this upper wave here. Doesn't necessarily mean that we're going to push to the high side here, but we've got a lot of consolidation. What I would like to see is a break over 45.73 to really want to get long. We've got about 10 to 13 points to the high side here to our next resistance level of 45.86. However, if we do start to break down, right? Look at the wicks here. If we do start to break down the last 1, 2, 3, 4 hour candles, then you can see we have a potential pullback into 45.59. It's no secret, guys, that stocks stop at specific areas of supply and demand. Again, my charts can be very confusing. It's got a lot of stuff going on it. However, the way I base my trades is based on potential, just due to how much room or potential space that we have. So what that means is I'm not realistically looking to take these small scalps when we've got 1 point or 2 points between a supply and demand zone. What I need is gaps. I need space. I need potential so I can get in on these trades and not have to worry about being stopped out in 5 minutes or 10 minutes or 15 minutes. I want moves that when they confirm these pivots, we're going to gravitate towards that next area of supply or demand. So for me personally, I would need the ES to start closing over 45.69 and start taking out 45.74 before I want to get any more bullish on buying the ES. Now, again, that break to the downside is 45.62, and I'll be looking to take some profits. 2 to 3 points is not much, but again, if sized properly with good risk management, making 2 to 3 points on an ES on a slight scalp backtest into rising support can pay pretty good. So again, we don't really have any type of short-term change in trend on the ES until we realistically start to lose 45.55. 45.55 kind of breaks this uptrend that we've been in. 45.55 has room down to 45.47, and then if we do get below that, we can talk about some levels going forward. So, again, what am I realistically looking for? I'm looking to be really patient is what I'm looking to do. I'm not really looking to, what 1 minute, 2 minute chart has a potential for a trade, because even though I just want you guys to look at this price action that we had here, right, on the 5-minute time frame. Even though the last couple of days trading, was shorter days due to the holiday, and we didn't have a whole lot of volume. When you start trying to trade on the 1, 2, and 5-minute chart without any potential on your larger time frames, you tend to get price action like this, where you get these setups, right? For example, long side, you get in long here and it pulls all the way back and stops you out. Then you're thinking, oh, well, we're going to break this prior swing low here, so let me go ahead and take a short position, and it chops you out for an hour. What happens is you don't have a whole lot of space in the trade to begin with. So what you're looking at on the 5-minute time frame looks great, but realistically, there's not a whole lot of space there for you to make any actual real money. Again, so just be a little bit more patient. You want some of these bigger levels to break, whether it be on the 1 hour, 4 hour, or daily time frame. And that's where you want to set your scalps up around. That's where you want to set your day trades up around. So again, we're going to get into some of the stocks I like to trade. We're going to look at Tesla. So Tesla here had that nice pop. I actually caught Tesla long on Friday off the open. I had a little bit of a setup here, and I can kind of recap that if anyone does want to see that. But what I'm looking for here on Tesla going into Monday's session is I need to get over 237. I would like to see a close over 237.5 and then confirm that. Anything over 238.77's got a lot of room to stretch into 242. That's going to be my measured potential. So I will be looking to take profits above Friday's highs into 239, 239.50, 240, so forth and so forth, right? Depending on how many contracts that you take or how many shares that you take, you want to scale out in waves. Now to the downside, I need to lose this whole prior channel here. Wednesday's lows, the pre-market lows here from Thursday going into Friday. I need to lose this area here. Again, I don't really see anything too significant on Tesla to the downside. until we start to close below 233.27. That has room down to 231. Again, if that's what you're looking for that quick dollar, looking for that quick $1.50. If you get the close on a 1 hour time frame below that level, what you need to do is have a preceding candle take that out. Now you can manage that on a smaller time frame. It doesn't have to be a preceding 1 hour candle. So let me just make this as simple as possible, because people tend to get confused when it's really not that confusing. Let's say, for example, pre-market, we're trading on Tesla at 233.20. Okay, 233.20 is what we're trading on Tesla. That would be losing all of this support. Okay, the support that I'm looking at is a linear regression as well as 150 simple. If we open the day tomorrow at 233.20, that's below your support. What you can then do is go to a 5-minute or a 2-minute or a 15-minute or whatever time frame chart you want to manage your trade on. As soon as we break that level, okay, which is the 233.34, that's your support. And I'm giving a fictitious example. Let's say, for example, the pivot is 233.34. We are trading off the open and opening up at 233.25. Okay, we're below the demand. What I need to see have happen on a 5-minute time frame, I'll use a 5-minute time frame as an example, is I need to see that demand zone get broken, get pierced, put in a wick, close below something on a smaller time frame, and then I need a preceding 5-minute candle to confirm the new low. So if 233.34 is your pivot, that needs to get broken. And when that gets broken, that new low becomes your entry. Does that make sense? So when that entry gets confirmed, that's when you're going to want to go ahead and take that trade. Okay, guys, I think I just lost the battery on my camera here, so just give me 1 second. I'm just going to go ahead and take that off for a quick second. But again, so what you're going to look for is that support system, right? That support system, whatever that support is, that 233 30s, that needs to get broken. And when it gets broken, then and only then, when it's confirmed, can you take that trade. And where would you be looking to take profits? You're looking to take profits at the next level of demand. Now, if you don't have your chart set up this way, this is the way that I teach it at Evolution Traders. If you don't have your chart set up this way, then maybe realistically, you're not going to know that you have rising support sitting at 231. So you're not going to know to take those profits. But again, over here on this side, I understand that either I'm going to hold my short trade into 231.11's 231, or I got to, guess, right? Which we never want to guess where you're going to take profits. A lot of times traders will find a really good setup and it's a valid setup, and they get into the trade and they're just holding for too darn long because they have no idea they're running into support or they're running into supply. So again, that's what I'm looking for to the downside. So what I'm looking for to the downside, 233.27, I've got room into 231. But if I do start to close below 229, I've got a lot of room. Tesla could really flush below 229. To the high side, what I'm realistically looking for is some type of close over 237. And then I would like to see 238.81 get confirmed. I've got room to 241. That's where I'm going to look to take profits. Let's look at NVIDIA. I'm looking at NVIDIA short for tomorrow. I'm looking for NVIDIA short for tomorrow. All I'm looking for here is, if you look at this 1 hour time frame, NVIDIA breaking down a little bit. If we do have any type of gap up, any type of green open on NVIDIA, that's exactly what I want to see. And as soon as we start to lose the 475, and then we start to lose this lower Bollinger Band here at around 473, we've got a lot of space. I'm looking to start targeting 468 and anything below 468 for a good extended wash. Okay, so my bias is short on NVIDIA for a continuation of a little bit of a continuation pullback. However, if NVIDIA gaps up or NVIDIA starts surging off the open, I'm going to let it go. I'm going to let it go. I've got too much resistance here. NVIDIA would need to break back over 496 before I have any more continued interest on NVIDIA to the long side for that short-term day trade. Okay, so 496. Now, does that mean that there's not going to be any scalps long between 477 and on the road to 496? Of course not. But for me, it's not worth it. For me, on the way I trade, my risk to reward ratio, my risk to reward strategy, My risk management, it's not worth it. Let me sit on my hands. Let me wait for a better hand, right? If any of you guys play poker, we can't just play every freaking hand, right? We want to play premium hands, okay? I'm not going to play a 2-6 offsuit, right? Like, I'm just not going to do it. So again, I'm going to wait for my premium hand. My premium hand is a bounce on the video, rejection, and then a loss of these lows, 475, 476, okay? I'm going to look at Amazon here very quickly. Amazon's kind of holding up to the high side here, doing a little bit of consolidation. We did have a nice pullback here on Amazon that came down on Tuesday. I'm going to take these old drawing lines off here. What I'm looking for here on Amazon, it doesn't have a whole lot of room here, but if we really start to take out Wednesday and Friday's highs, right? It gets over this Bollinger Band. Maybe we've got some potential here for a little bit of a trade to the long side. 147.36. 147.36 is going to have room if confirmed into 148.66. So there's a dollar room here, right? So anytime you're looking at that and you've got a dollar potential, right? Amazon's $150 stock, give or take, right? It's not going to move like Nvidia. It's not going to move like Tesla. It's not going to move $3, $4, $5, $6, you know, in the blink of an eye. It's going to take a little bit of time. It's going to move up 50 cents, 80 cents, a dollar, back down. So again, if you can see potential in this trade here over 147.30s, and you have potential to make a buck and a quarter off of Amazon, size yourself appropriately. Take 10 contracts, 15 contracts. You know, look at the ATR. What's the ATR? 54 cents on Amazon. You risk 50 cents on Amazon, right? So even if you're playing 100 share lots, you're risking 50 cents. You're risking $50 per every 100 shares. You can kind of do the same math for options. Again, for options, you know, if I'm going to put a stop loss here on Amazon, let's say, for example, Amazon starts to confirm 147.36. What needs to happen? 147.36 needs to get punctured. It needs to get broken. I don't care if it's broken by a penny or broken by, you know, 15 cents. Whatever that new high is over 147.36 on a 5-minute candle or 2-minute candle or whatever time frame that you want to manage. Again, guys, you're looking at the 1 hour time frames. You're managing on a smaller time frame. Okay, we're not going to manage a scalp or a day trade on a 1 hour time frame, but I sure as hell am going to take my levels from the 1 hour time frame. So again, if we're going to manage on the 5-minute time frame, and I'm looking at a pivot of 147.36, I need to see a 5-minute candle break 147.36, put in a new high. When that new high gets confirmed, I'm all in. My potential is 148.66. I'm taking profits on the road to 148.66, and I'm going to use a previous 5-minute candle low as my stop, or I'm going to use the 5 or 10 day moving average, any candle close below that as my stop on my managing time frame, which is a 5-minute. I hope that makes sense. It's not really that complicated, guys, how to manage these trades. It's really not that complicated. What's complicated is all in your head. You guys start thinking about it way too much. Let's look at Meta really quickly. Meta is kind of having a little bit of a back test here, resting on support. I'm going to take some of these old support lines that I had on there. What I would be looking for here on Meta, if Meta starts to crack below this 336, right? If we start to crack below 336, we got room to 335. I would need to see, you know, something in the pre-market, either break this level and then push higher and then confirm it. It's only got about $1. I'm not too concerned or interested in Meta until probably we start to lose 335. 335, any close below that on a 1 hour candlestick on Meta is going to be something that I'm going to be in on, right? I'm going to definitely be in on that 335, and I've got room down to 331. So kind of just set an alert, mark Meta for, you know, a break of 335 to the upside. It's got a lot of work to do. You know, I need to see it at least close over 341 and start to at least challenge this 342 here before we get some upside. Take a quick look at AMD. Take some of these price level lines off. AMD's holding up fairly well here. Holding up fairly well. We do have those highs from Wednesday of 124.76. What I would be looking for here is, let's see if we can get a little bit of a break over this 123.30s. Again, how does it work, right? This is a 5-minute time frame on the right hand side, by the way, guys. How does it work, right? So for example, again, I'm going to relay this, I'm going to lay it down and I want you guys to pick it up, right? So 123, I'll go over the futures again right now real quick. 123.29, right? 123.29. What I need to have happen, let's say for example in the pre-market tomorrow, if I'm looking at 123.29 on AMD, what needs to happen is, let's say for example, in pre-market, we're opening up at 123.35, okay? 123.35. We've already broken this level, right? We've already broken this pivot level. What I need to see have happen when the market opens is to confirm the new high. When the new high gets confirmed, I've got room where? 126.47. Now again, does that mean I'm looking to take $3 in one shot on AMD? It's a $122 stock. It's a baby stock. Of course not. But what it's telling me is I got 3 points of potential upside. I'm going to start to look to take profits into some of this resistance that we had here going back to Wednesday. Now, if you look at the candlesticks here, this nice run up that we had where we got rejected the first time off the linear regression was 124.76. So if I get in over 123.30s, I'll look to take profits into 124.76. Again, hold the runner because your potential is 126.47. Makes sense. So when you're managing that on a 5-minute time frame, notice how on the right hand side chart here, I've got room. Okay, I've got room that if we break 123.29, I've got supply here at 123.50. So what do you think would probably be the best scenario, right? If we're looking at 123.29 and I know I need this level to get broken before I can enter long, but I have supply on a 5-minute time frame at 123.55. If this level gets broken and we punch up into this 123.50s and then pull back, guess what becomes my entry for a long? When we confirm not only the 1 hour chart that has a lot of space up, but when we confirm that new high and break through this linear regression at 123.54, it's simple. It's not rocket science, guys. Sit, wait for your levels to get broken, and then you're going to have much more success. A lot of you guys have a chart like this on the right hand side, this 5-minute chart pulled up, where you're looking at every single candlestick. I mean, notice this, like right here's, I'm going to tell you exactly what happens to most of you guys out there, right? You guys are watching a stock like this. I don't care. It could be futures, it could be stocks, it could be options, it could be crypto. Most of you guys are watching this move. You see AMD start to explode off the open. You start telling yourself, oh my God, we're above pre-market highs. Oh my God, we're taking out supply. You jump in, right? You start to go green. You start to go green. Next thing you know, the next candle pulls all the way back and you watch those profits go away and you go red, red, red. And you're like, holy shit, I just got trapped. You get out of the position. Next thing you know, the position still ends up going in your favor. Now, it doesn't make a new high, but it still would have made you a little bit of money. So again, when you start to watch each and every single one of these 5-minute candlesticks, this can get confusing. It can get mentally draining and exhausting if there's no real room in the trade anyways, right? What do you want to be doing? You want to be buying at support, selling at resistance. Sounds simple enough, right? But if you have no idea where the hell support and resistance is at, then you're going to have a hell of a hard time trying to buy at support and sell at resistance. Makes sense? So again, make sure you have room on your 1 hour, on your 4 hour, on your daily chart before you even start thinking about scalping the 5 or the 2-minute chart or whatever, right? I don't care if you're reading candlesticks or not. You can read the 2-minute candlesticks all you want. If you have no idea where the hell you're running to, you have no idea where the hell you're going to take profits. And more than likely, you're either going to get burned on a trade because you're going to chase a move just because the candle's exploding and it's running into supply on a higher time frame and it's going to pull back, right? Or you're going to win that trade. It's going to give you a false sense of security. You're going to do it again. Only thing is you're going to size up and you're going to get smoked, right? Again, take your time. Make sure that there's room on the bigger time frames. Again, we got people coming in late. Let's go over the futures one more time, right? We'll go over the futures one more time very quickly, right? Very quickly. So again, what am I looking at here on the futures, right? We obviously know we've had a phenomenal run here over the past month, right? Maybe even longer than that, month and a half to the upside, right? Where essentially what it seems like is all Everyone who is trying to take a short position anticipating the pullback is getting trapped, right? It's like a never ending week by week by week by week, squeeze to the upside, because every pullback gets squeezed to the upside. Every pullback that looks like it's going to break down gets squeezed to the upside. So here we are again, coming off of a short trading week due to the holidays. We're pulling back and consolidating, mind you, very low volume the past couple of trading days on the future side of things. So can you really put a lot of weight behind that? Probably not, right? I mean, there's nobody home. There's nobody home to defend prices. So regardless if the market, went sideways, it spiked the last couple of days, it went down a couple of days, there's nobody home to defend prices. You know what I'm saying? So when you have no one home to defend pricing, of course, these things are going to float through levels and make it seem like there's something bigger going on. Again, we're going to really get a good taste this week as to what's going on. But what I do want to see is I do want to see a back test, right? Because the farther up you get, the more you go before you have any type of distribution or consolidation, the harder the fall is going to be. Now, I'm not saying we're going all the way back down to the lows. But what I'm saying is that pullback is going to be a lot more drastic than if it was much more healthy and organic. So what I'm looking for here on the NQ going into tomorrow's session, right? Futures are going to open up. Futures are going to open up here in a few hours, right? Later on today, they're going to be open up all night. And what we need to kind of look for here is couple of support levels that need to hold, right? So the first support level that needs to hold is 15,978. That's going to be your 150-day simple moving average on a 1 hour time frame. Now, there's going to be a little bit of an opportunity here in the overnight session below 15,996 into 15,979, 980. Is it a lot of room? No. Does the market move a hell of a whole lot in the overnight session? No, right? No, like it takes hours. Like, you're not going to sit there and scalp a 25-point move, 50-point move, in the overnight session. If anyone who's traded futures, you know that, right? So again, but could it move 30, 40, 50 points over the course of 3 or 4, 5, 6 hours? Of course it can. But what I'm saying is that if you do want to play a little bit of a back test, right? Then when we start to confirm 996 to the downside, you have support at 979, call it 980. Okay. So if you want to position size yourself accordingly to take maybe 4 points, 6 points, 8 points to the downside on the NQ tonight, maybe you can do that with very minimal risk. Okay. Because how that's going to happen is this: once we break this 996, soon as we break that on a 5-minute candle or 2-minute candle, whatever time frame you're going to be watching, as soon as you break that 996 and put in a new low, when that new low gets confirmed, you put a stop loss at the previous 5-minute candle high. Okay, boom, set a hard stop loss, previous 5-minute candle high. It might be 1 or 2 points higher than your entry. So you're not going to risk shit, but you have potential to make 5, 10, 15 points on the way down into this 979. Okay. Now, the bigger move to the downside is going to be a break below this 150 simple 15,979. That's got room down to where I would personally like to see it get to 938. That's the 200-day moving average. Okay. Now, anything below 938 has room down to 883. That's going to be a big move there, and everyone needs to capitalize on any type of washout that we have below 15,937. Again, write it down, set an alert, do whatever you need to do. If 15,937 gets broken on NQ, if that gets confirmed, that needs to be a short position. There's 50 points of room to the next demand, right? So what I'm trying to tell you is stocks do not randomly stop, okay? They do not randomly just pick a fucking random area in the middle of nowhere to say, hey, this looks like a good place to bounce. Hey, this looks like a good spot to get rejected. No. They go to specific areas of supply and demand. I don't care what fucking strategy that you use. I don't care if it's ICT. I don't care if it's supply and demand. I don't care if you're drawing on your own charts. I don't care if you're using EMAs and moving averages or pivot points. I don't give a shit what you're using. Okay. It's all the same stuff, guys. Emotional buyers meet technical sellers meet emotional buyers. Wherever those spots kind of trigger in the markets, is where you're going to have some inflection points, okay? And people put fancy names on their strategies to kind of silver spoon or gold spoon this shit. It's all the same things. Where do people start to feel emotional pain? For example, if I'm long NQ, right? Think about this. If I'm long NQ, am I going to really feel too much pain down here at 978, right? Not really, right? Not really. This is still holding an uptrend. Now, if we break this 978 and we overshoot it and we come down here to 937, am I going to feel, pain? Yes. Am I going to be, jumping out of a 30th story building because, the world's coming to an end? Probably not. But if I start to lose 937, pull it up on your charts, right? 15,937. Look at the last 3 or 4 days. If I'm a long and I start to lose 15,937, am I going to start to feel some emotional pain there? Because that could be a short-term potential change in trend that could have further potential downside, right? Further potential downside. So again, some of these levels, there's no secret. There's no magic fucking pudding as to where these things are stopping and heading to, but it's where potential longs and shorts have emotional pain. Okay, so those inflection points is where you're going to tend to see pivots happen, whether it's a bounce or whether it's a flush or whether it's a consolidation period, right? So again, you have to get really good at kind of identifying where these inflection points are, where these emotional pain and trigger points are going to be based on whatever strategy you're using, right? I teach one specific way to trade at Evolution Traders. It doesn't have to be this way. There's a million different ways out there to kind of find your support and resistance, supply and demand, your whatever nonsense, you want to trade. It doesn't really matter. Moving averages, I don't care, Fibonacci's, it doesn't matter. I can put a fib retracement on this chart too, and it's going to match up with one of the moving averages that I have. Does that mean that fibs are better than my moving averages, or my moving averages are better than fibs? Of course not, right? I can take the chart down bare bones and look at, this fair value gap that we have here, and in this support that we've got here, this is where we're going to bounce. Is it any different? No, it's all the same shit, right? It's all the same shit. So what I want you to understand is that your trades, whether you're scalping or you're day trading, they need to start on a higher time frame. If you are purely looking at 1 minute, 2 minute, 30-second, 5-minute candlesticks, and you have no idea where some of these macro levels are, then I'm going to tell you, all you're doing, these on this left chart here, these are all 1 hour candlesticks. All you're doing is getting stopped out inside these big candles. You're taking profits in these big candles. You're getting stopped out in these big candles. You're retracing in these big candles. Realistically, if you start to scalp the 1 hour, 4 hour daily levels around your smaller time frames, you're going to have much more higher success, because those levels, right, once broken, have a lot more potential. So what's the problem when you're scalping a 2 minute, 1 minute, 5-minute time frame? You get into a trade, it starts to go in your favor, and then quickly comes back, and then starts to go the other way, and then you stop out. But realistically, that chart is not doing anything more than figuring itself out on the higher time frame. Okay, so unless you're pinpoint accurate on your entry on a smaller time frame, you're going to have less sort of wiggle room, less cushion, so to say, right? You're going to have less cushion, because when you have less cushion, you need to be more precise. Your stop losses need to be a little bit tighter, or your take profits need to be a little bit tighter, right? Because you don't have as much room to work with, right? So let's say, for example, on the NQ, if you've got maybe 15 to 25 points worth of room for the NQ to move on a 5-minute time frame, you probably have 50 to 60, 70 points worth of room on a 1 hour time frame. Now, do I want to scalp where I've only maybe got potential of 15 to 20, 25 points and have to be pinpoint accurate, right? Or do I want a little bit of cushion where if I take a potential trade, I've got maybe 70, 60 points of potential where I only want to take 15, 20, 25 points? Does that make sense, right? A lot of you guys on the NQ want to take 20, 25, 30 points out of the market, but you're trading a 1 minute time frame where the fucking candle is only going to move 12 points at a time, you know? So it's like you have to be really right on the move in order to catch 1, 2, 3, 4, 5, 6 consecutive green candles on a 1 minute time frame. I hope that makes sense. So again, what are we really looking for here on the NQ? Personally, for me, going into this week, I'm looking for a little bit of a back test, baby. Like let's give us that, you know, that elevator ride down, right? Because a lot of people can make a lot of money very, very quickly when the market comes down. And I'm not a bull, I'm not a bear, I don't really give a shit. I'm a realist. I got bills to pay, I got mouths to feed, I got car payments, I got a mortgage, I got shit to do, right? So what I'm saying is I need to make money however I can make money. And whether that's going long or short, it really doesn't matter to me at the end of the day. Just give me some volatility, give me some ranges. What I don't like is when we go sideways for 6 hours, because I watch the 1 hour candles. So I'm only going to be watching 6 1 hour candles each and every single day. When those candles don't get outside the first hour candles range, there's nothing really there for me to trade. Okay. Now, again, can you range trade on a smaller time frame? Sure. That's not my style. Again, that's not my style. I don't really like doing that. I need to catch bigger moves. I want to catch the bigger moves. I want a bigger piece of the pie. So what I'm looking for here is, let's say, for example, in the overnight session, we pull back into 950s, 970s, even if we do get down here, which I don't think we get down here in the overnight session, but let's say, for example, we do, right? Because you have to play devil's advocate. You have to expect all outcomes. The moment you start just thinking, well, we're going to come here and we're going to bounce, is the moment you get smoked when that doesn't work. So just play all scenarios out through your head, right? So let's say we come down to 980s or, you know, 950s, and we start to bounce and we start to make our way up in the pre-market. If we can close over 16,054, I will look for a long position on a preceding hour candle to take out that new high. Okay. So 16,054, I want to get long on a preceding hour candle. I've already explained how to take your entries on a smaller time frame and how to set your stops, so we don't really need to go over that. But what I'm looking for to the high side is 16,054. That has about 30 points of room to your next supply zone, which is sitting at this Bollinger Band. Again, it doesn't matter what kind of technicals you're looking at, because look at the Bollinger Band sitting here at 16,083. Look at a lot of this fucking price action that we had sitting here, right? What is the prices? Between 1680 and 1686. So why do you think the Bollinger Band's here? I don't know. You know, it's not rocket science. So whether you don't have a Bollinger Band on your chart and you're just looking at this prior swing high here, doesn't really matter. Over 16,054 has room into 1680s. Stop trying to time everything to the exact penny, to the exact tick. Just play them as zones. Play them as territories, right? Over 1650s has room on a confirmation into 1680s. Anything over 1680s has got fucking open skies here on the NQ, and we can still continue to push to the high side. Which, if the bulls are going to keep proving to us what they've been proving to us, then the next stop here very well could be, you know, back into 16,184. Okay, 16,184. And if you want to get more technical and more macro, over 16,200's got room into 350s, 16,350s. I'm not calling for anything like that, but I'm just saying, like, you have to understand where your potential is, right? So again, if we're going to say that potentially if we start to lose 930s on the Qs, that we can go down to 883, then we potentially have to say if we can start reclaiming, right? Reclaiming this whole 16,080s area, that potentially we can go up to 184, if not 357, right? So again, you know, I mean, I don't really know what else other technical analysis we need here. What I need to see personally have happen is I need some of this space to start opening up, right? So again, depending on what type of trader you are, whether you're a scalper or a longer term intraday day trader, you know, for me, I think that the bigger potential for me is a close and break below 15,977. And I would like to play that into the 930s. And if I can catch 35, 40 points off that move, that'll be a one and done trade for me on the day. With the position sizing that I'll be willing to take on this trade, you know, anything below this 978, okay, that gets confirmed, I'm playing this into 930s, 940s. There is no ifs, ands, or buts about it. There's nothing here. You know, like I said, stocks don't just magically fucking stop nowhere, right? Now, could it put in another move, let's say to like 960 and then start to come back? Of course. And what fucking happens when it does do something like that? People get in, they're up 10, 15 points, they take no profits. It comes back to break even, starts pushing up, they're red, they get out of the position, and then they look back 2 hours later, and guess where it's fucking trading at? Down here at 937. It happens every time. Again, it's these inflection points, these supply and demand zones, these moving averages, these whatever you want to call them, right? It's all a play on human emotions. This is an open marketplace, guys. So you have to understand where are shorts going to feel pain, where are longs going to feel pain, and how much can we bend that rubber band, right, to get them to snap so we can get what we want. Who's we? I don't know. It doesn't matter. I'm we, right? If you're long here, right? If you're long, I want to break through this level of 979, and I want to squeeze your ass down here until you get stopped out. And then guess what? We can snap back a little bit, and then I'm going to continue to flush down here. So again, who's we? It's no one. There's no masked fucking person out there trying to, hunt your stops or take your liquidity, guys. It's just, it's an open marketplace. It's been around since the test of time. Just like get serious one time, right? So again, 15,979, let's call it 980s. I'm looking for that short trade into the 937s. Now, if by some, if something crazy happens in the market where we get a little bit more of a drastic pullback than that, my next stop would be 883. Okay. And then, then from there, I'd have to really do some more, technicals to really see what would be the next potential landing spot. And again, as far as to the high side, 16,054 into 83s. However, anything over 83s has got room 100 points higher. So that's definitely going to be a trade that you're going to want to be involved in. We can quickly take a look at the ES. I don't really trade the ES all that much, but again, technicals are technicals, right? It's not nothing crazy. The only reason why I don't trade the ES is just a little too damn slow for my patience, right? But again, that doesn't mean, I trade with traders at Evolution Traders who make great money trading the ES. It's just, you got to find what you like. Again, don't trade NQ because I trade NQ. Don't trade the ES because some Joe Blow on Twitter or YouTube, made $50,000 on some fucking prop firm, playing fucking SP 500. Like, guys, trade what you feel comfortable trading. Everyone's different. If everyone was the same, we would all be out here making $1 million fucking dollars, right? So again, trade what you feel comfortable. So on the ES, right? If we look at the ES is broken down this 1 hour, 50 SMA, EMA, multiple hours now, the last 3 or 4 trading hours that we had on Friday. What I'm looking for here is a confirmation through 45.62. 45.62, and I want to cover at 45.60, 45.59. Is it a lot of room? No. It's not, right? But we're coming off of, not a whole lot of action going on the past couple of days, right? Because of the holiday. So this is your next support. If you're waiting for some kind of support bounce, some kind of reversal, your supports are going to be 45.60 and 45.55. How you can play these bounces is if we pull back into this area or pull back into this area of 45.55, you let it pull back into this area, you pull up your smaller time frame, you get a green candle taking out red, you use the low of the last swing low as a stop, and you ride it back up into supports or supplies. So from 45.55, I'm targeting 45.60, and from 45.60, I'm targeting 65.66, right? That's exactly how it works. Does that mean that I'm going to try to target from 45.55 all the way fucking up here to 45.74? No, that's fucking ludicrous, right? There's going to be a new trade that forms up here. Your bounce plays is from 45.55 into 45.60, from 45.60 into 45.65. Those are your bounce plays with the prior swing low, whatever that is, as your stop, okay? Now, if you're looking to go down, well, sure, you can play it down. What would be your stop here? Prior swing high is 45.73. Is that too much risk for you? Because look at where this low is at, 45.62. Do we want to risk 9 points on the ES? I probably don't, right? Like, I don't want to risk 9 points on the ES. So where can we kind of tighten that up? Maybe a close over the 20-day moving average, 45.69, right? 45.69 to 45.62. I'm willing to risk 6 points, right? I'll risk 6 points. You want to tighten it up, use 45.68. Again, that's why I use this chart. You have so many different areas of technical, technical spots where you can get out, right? Where you can get out and where you can potentially see your profit. So again, the short position for me is 45.62 into 45.59. Okay. Below that, it's to 55s. And if we do manage to get below 55s, it's 47. But again, I don't want to, fucking put my foot too far down my mouth. We gotta work some levels here. And again, the ES, just looking at the last couple days, obviously not a lot of volume and price action going on, but it's kind of just consolidating sideways here, right? So it's definitely still more bullish context than bearish context. So if you are looking for those shorts, just understand that you're going against the trend. So maybe what do? Size down. Maybe what do? Instead of trying to get 5 points on the ES, maybe let's take 3. Instead of trying to get 25 points on a short on the NQ, maybe let's get 10, 12, right? But if we're going to the long side, that's a little bit different until the bulls prove us wrong. Right now, the bulls still get the benefit of the doubt. Guys, I hope you guys enjoyed this kind of video. I just wanted to kind of pop on here. I wanted to test some things out. And I just kind of want to shoot the shit for a little bit and go over some of the levels that I was looking at. This is kind of some of the stuff that I'm going to do in Evolution Traders, in that community. If you guys want to get access to that, that link's down in the description box below. But again, stay safe this week, guys. Don't rush, don't over push it, don't overstay your welcome in trades. And remember, good risk management is how you become a great trader. It's not about trying to hit the home run on the one trade. It's about, keeping the lights on for an extended period of time. But I'll catch you guys